Let me just quickly check, make sure no one's messaged me on WhatsApp, and we'll get started any second now. And stocks wise, I've got some stuff on how you can look at a company's debt and really understand the company's debt a little bit better. So that should be coming out. Okay, let me know if you can see my screen. Boom, can you see my screen? Yeah, all good. Okay, cool, perfect. Okay, cool. So first of all, we'll start off with this week's earnings. So this week we've got some more bad boys doing their earnings this week. In my notes that I've written down straight off the top of my head, I know that we've got, so I'm going to skip this page, we'll go straight to the earnings page. I know that we've got Lyft doing their earnings this week. Don't know how they're going to do because of COVID, so I'm expecting that to go down. We've got, who else we got? Oh no, this is last week's. Sorry, guys. Sorry, this is all my other Canva shit. So yeah, we've got Coca-Cola, we've got Disney, we've got Uber, we've got Under Armour, we've got AstraZeneca, which is very interesting if you've heard the news about AstraZeneca today. We've got Pepsi, we've got Kraft Heinz, we've got Kellogg, and we've got GoDaddy. So we've got quite a few. Oh, everyone's coming in now. Okay, so go here. Yeah, I don't know why that I didn't replace that image, but oh well. Okay, so that's old. Don't know why that image didn't replace itself. So we'll just go straight onto the debt thing, and then we'll go straight into the crypto stuff straight after that, and the digital world side of things. Okay, cool. So understanding types of debt. So this is for the stock investors that want to kind of understand the fundamentals behind companies. So you got the two types of debt. So you got the long-term debt and you got short-term debt. So you've got debt that's either used to cover operating costs, which is normally the long-term debt. And then you've got the debt, which is the short-term, which is to cover financing. So this is normally, how do you differentiate those two? So long-term debt is usually used for investments. So taking out a large amount of capital and using that debt to build factories, to build product lines, to pay for R&D, whereas short-term debt's normally used to like pay people's wages, so on and so forth, if the company's struggling in that sort of situation. So straight away from that, you don't really want to be messing around with any companies that have got high short-term debt. It's much better for them to have long-term debt, simply because it allows the company to pay it off over a long period of time. It's like if someone came to you and said, look, I'm starting a business, and then they said, look, I've also got, I've taken out a loan on the business for £10,000. Would you prefer that that £10,000 had to be paid back in a year, or if that £10,000 that the business had taken out had to be paid back in 10 years? You're obviously going to prefer the long-term debt, because then you know that a business should be able to make £1,000 a year profit to pay that debt back. So that's how that works. So in terms of short-term debt, let's really understand what the different things are. So you've got short-term bank loans, accounts payable, commercial paper, wages, lease payments, and taxes. So short-term debt is normally covering, like we said, the little things, the little niggly things that I'd refer to them as. So you got your short-term operating, which is stuff like short-term bank loans. So on the 13F filing or on Yahoo Finance, you'll be able to find this on the form, which I'll show you later. And then you've also got accounts payable. So what is accounts payable? Accounts payable is just basically, say, for example, any outstanding orders that they've got to fulfill. So let's say, for example, with Nike, they might have really high amounts of accounts payable because they might have manufacturers that they still need to pay for this year's goods that have come out, if that makes sense. Or say, for example, paying for designers or engineers or so on and so forth. So that's unpaid invoices, basically. Then commercial paper, that is basically 270 days to finance payroll. So that is basically contracts to say that they've got 270 days to pay it off is commercial paper. Next is wages. We know what they are, but people don't often think as the wages in a company as a short-term debt. However, some companies have actually gone bankrupt in the space of a year because they couldn't afford to pay the wages. And again, what does that do if a company can't afford to pay its wages of its staff randomly in a year? That's bad press. That is majorly bad negativity. Like, no matter how good of a company it is, imagine all of a sudden Apple said tomorrow, actually, we can't afford to pay all the staff's wages. It would be uproar. It would be all over social media. It's going to cause the stock price to go down. Lease payments, again, is short term. This is because a lot of companies have lease payments on the buildings that they're in now. A lot of companies don't actually own the buildings that they're in. So you've got that as a form of debt. Then you've also got the other types of lease payments for machinery. So a lot of robotics in factories is actually leased. So say, for example, Amazon with all of their robots that they use in the warehouses, they don't actually own all of those until they started creating their own in-house. They used to lease them from companies. And then obviously taxes. You want to make sure a company's up to date with their taxes, because if they're not, and you've invested in them, and then they get hit with a fat hefty tax bill and you haven't seen if they've got enough cash to cover it, then your investment's going to go downhill. Then we've got our long-term debt. So this is more for financing. So this is, you got to kind of understand the rich dad poor dad thing of good debt versus bad debt. I would normally call long-term good debt because it's normally used efficiently. However, again, you want to look at this in more detail. So bonds. Sometimes what happens is the company will release their debt into bonds. So Apple has recently done this, whereby the debt that they have, they've released it as a bond, guaranteeing the people that are holding that bond that after 5 years time, 10 years time, they'll get that amount of money. So people use corporate bonds as a storehold of wealth instead of growing their wealth. Personally, I don't know why anyone would want bonds in Apple versus just investing in the stock, but you know, then there's some use for it. A lot of hedge funds use it as a security thing against economic downturns, like we've seen. So there is a use for it, but for me personally, I wouldn't do it. Individual notes payable. So individual notes payable, that is more, how do you describe that? Individual notes payable is like a promise to pay an investor. So say this is normally paid out to people that were in the seed rounds or in the venture capital round. So say, for example, a company's just starting up. So like Airbnb, perfect example. So Airbnb will have individual notes payable. And this is where you want to check the financials on companies that are starting up, because they might have massive individual notes payable outstanding of, say, for example, if they hit a certain sales target, then they've got to pay that investor X and X billion, which could completely destroy all of their financials. So look out for that one. That one's a very tricky, naughty one. And then you've got convertible bonds. So this is bonds that a company can issue out, but then those people that have got those bonds can convert those bonds into stock instead for the same price or that the stock's currently at, or the same price that the stock was at when they got that bond. It depends on how it's been issued. Then obviously we've got our long-term leases. This is long-term obligations, normally on property. And then another liability that people don't really assess for when they're looking at a company is their retirement benefits and pension pot, because everyone that's on your pension payroll that you're promising that you're going to pay the pension for, you've got to have that money there so that you can actually cover it. Because if you don't, again, that is massive scandal that's going to cause you massive problems. Then we've got the contingent obligations. So this is, again, another tricky one, what you want to look out for when you're looking in a company's reports. This is actually where the company is talking about the contingent obligations, lawsuits. That's the best way of describing it. So contingent obligations is a company taking contingencies to have reserve cash set aside for a potential lawsuit that they're paying out. So if you know a company's had a few legal battles, whatever and whatever, or they're in a bit of a sticky situation, you might want to look at the contingent obligations that they hold, because again, if it's too high what they've got to pay out, again, it can completely destroy a company internally. So these are the things, some of the things that I look at in terms of debt on a company before investing, when I'm kind of taking my fundamental, after the steps that I showed you last week, when I'm taking it just that little bit further, the things that I would look at, just kind of scanning them to see, okay, how are they running this company? If I'm giving you my money and I'm investing in you for 5, 10, 20, 15 years, then I want to know that you haven't got any crazy outstanding contingent obligations or any crazy individual notes payable. Hopefully that makes sense. Now, one of the things that you can do with companies is you can quickly check their current ratio and their quick ratio. So I've got a note here on how best to explain it, because I find it pretty hard to explain. So it's basically their ability to pay off their debts this year is the quick ratio, and then the current ratio is their ability to pay off their debts overall. So you just want to look at it and go, you want them to have a good quick ratio. So in my notes I'll put it's the ability to, quick ratio is the ability to pay debts without selling inventory or assets or without loans and financing. The lower the number, the more they will struggle. So you want this number to be really, really, really high. You want them to have a really high quick ratio. You don't want them to be investing in a company with a low quick ratio, because then that means that they'll probably have to sell off some of their assets or their inventory to pay off that debt. So think of it like their cardio, and then their current ratio is their working capital ratio. So current assets versus liabilities. Yeah, that one's fairly simple. So that's just, can they cover their assets versus their liabilities on that one? Okay, cool. Digital money. Now the fun stuff. So let's get into this. I'm going to just share something with you from Arc Innovation. If you don't know who Arc Innovation is, get to know. So Arc, every single year, they do something called the Big Ideas 2021. This is something they release to their investors. And it's basically all the big ideas that they're investing in and why. And obviously these guys have got the best analysts and researchers in the world, like some of them. So the information they've got, the resources they've got, this isn't just me making this up. This is the best of the best research and stats put together. So they've got some stuff on electronic vehicles and deep learning and AI. You definitely want to have a read of this. Re-innovation of the data center. And then we're going to get into virtual worlds. And then the most interesting part that we're going to be touching on today which is digital wallets.
Wait, Sanjay Banga? So, no, I haven't seen Sanjay Banga in.
There we go. So we're talking about Sanjay Banga. Okay, cool. So digital wallets will represent a 4.6 trillion opportunity. So they believe that Venmo, Cash App, and venture-funded startups likely to upend traditional banking. And what this is going to look at is going to look at why. So according to ARC's research, digital wallets are valued between 250 to 1,900 per user, but could scale to 20,000 per user, representing a 4.6 trillion opportunity in the US alone by 2025. Yes, that's a 4.6 trillion business opportunity in just the US alone by 2025. That is ridiculous. Okay, cool. So why is that? So based on research from China, so China, obviously, they were way ahead of us with this digital payments thing. They were way ahead of us with the QR code thing. This was like yesteryear for them. So you can see the growth there. And this chart is actually in trillions, by the way. So the volume of mobile payments in China has exploded more than 15-fold in just 5 years. It went from 2 trillion in 2015, as you can see here, to an estimated 36 trillion, nearly 3 times the size of China's GDP in 2020. If that isn't an eye-opener as to what's going to happen, then I don't know what numbers you need to see. So digital wallets have become a phenomenon, as we know. Everyone we know now has a Monzo, or I can't even think of the other ones now. I personally have Revolut and Cash App. When I was in Asia, everyone uses Grab for everything. In Africa, I'm not too sure. I haven't been there. Same in South America. I'm not too sure, but I'm sure Pablo recognizes probably one of these here. So it's become a massive, massive phenomenon. Now, in terms of the acquisition of accounts, this is the difference. So in 2014 to now, we can see that Cash App and Venmo have gone from 0 to over 70 million users, or 60 million users in just the last 7 and 10 years. Whereas it took the traditional banks like JP Morgan to reach that number 30 years and acquiring 5 other banks to do that. So the speed at which people can get bank accounts now is faster than ever. Whereas before you had to go in, you had to sign papers, bring your documents, la la la. It was just a ball ache. It was just long. If you remember having to go to the bank to do that, it was the biggest chore in life. Now, in terms of the customer acquisition costs for getting financial products, a digital wallet costs just £20, $20 for that company to create. But then you got to think of the amount of money that's exchanging once you're using it, that they're making money from. And so in comparison to all the other platforms, it's the cheapest thing for them to do. Now, this is the interesting thing on proof that banks are dying, because despite everything that's going on, it's actually getting more expensive to run a bank, believe it or not. So for some unknown reason, it's $568,000 to run the average bank, brick and mortar bank in the US in 2019, which to me is ridiculous. Like, why am I gonna, sorry if you're working in banking, but why are you gonna have a physical bank? And I think COVID has proven that physical banks are just dead. They're a waste of time. Like, no, just do it all online. Just speak to somebody on Zoom. Now, again, with traditional banks, it's crime. Like, people try and rob physical banks. Trying to rob a digital bank, you know what? Fair play to you if you rob a digital bank. Like, you've done your work. Not encouraging anyone on here to go and rob a digital bank, by the way, but you know what I'm saying. So digital wallets are entering the unsecured lending market. So what's happening now is digital banks are now going into loans, which with digital banks going into loans, it completely changes the dynamic of what they're able to do and the amount of money they're able to take on. So this is done through Square, PayPal, Klarna, and Lending Club are now operating in this way. So I don't know if you use PayPal, but PayPal now also do a pay monthly option where you can buy something and then pay for it monthly. So you can buy a Nintendo Switch, you can buy a new phone and then pay for it monthly, which digital platforms being able to do that revolutionizes the whole game. Now, this is why ARC are saying that each digital wallet account is going to be worth 20,000, because you're going to be able to do multiple things in the same place. So instead of having to go to a different app to do your investing, to go to a different app to pay your mortgage, to go to a different app to cover your insurance, to go to a different app or a different app to buy things online, you're going to be able to just do them all from one single app. Now, imagine 5-10 years ago, this wasn't even different apps. This was different buildings. You had to go to a different place to get a mortgage as you did to go to get insurance, as you had to go to your savings account. Long. Whereas now, it can all just be done on a phone. So this is why it's calculated at around $19,900 per person using it. So then all you've got to do is calculate that by the total amount of users. So they've not even just estimated just 230 million users in the US spending and using around 20,000 worth of transactions on a US digital wallet is worth 4.6 trillion in just the US alone. So we can see here in the Cash App and Robinhood, this is the kind of amounts of money that's been spent in comparison. So then moving on to cryptos, which I know some of you guys are here for. Bitcoin's fundamentals. So based on search volumes compared to 2017, Bitcoin's price increase seems to have driven less by hype. So before in 2017, in the big crash, one of the reasons I stayed away from it was because I was just seeing the Google search on it going up. I wasn't really seeing any major banks or big players in the game, any whales getting into it. And as you know, I'm all about what the whales are doing. If the whales are doing it, I'm doing it. If they're not doing it, I'm not doing it, because they'll just short the market and just mess up your thing. So we saw in just the last year alone some crazy support for Bitcoin. So first of all was obviously Paul Tudor Jones made 1% of his cash into Bitcoin. Then the OCC grants federal chartered banks permission to custody crypto assets, so being able to confiscate them from people. MicroStrategy introduced a 500 million Bitcoin announcement. Then we had both PayPal and Square announcing that they were going to be getting into the crypto space. Now, what Square did, which is going to lead the way for everybody, is exactly what Tesla did today, which is putting 1% of their cash into Bitcoin. Now, I want you to just think, if you're running a business and you've got cash, would you rather have that cash sitting in a bank, earning you no interest, allowing you to pay off less debts, or having it in Bitcoin and it's an appreciating asset and it's going to grow in value? Because if you're doing it, other hedges are going to do it, and then maybe people aren't even going to go 1%, they're going to go 2%, 3%, 4%, 5%, because even if it crashes, it's not a dramatic difference for them if it's 1% of their cash. So to get a bit of an understanding of if a player like Apple does this, you're going to realize how much cash that would actually be adding to the crypto space or to Bitcoin. So let's see, go and look at the cash that Apple's got on hand. So we know Apple's got one of the world's largest cash reserves. I think they actually have the world's largest cash reserve, but it's going to be very, very interesting, because this is just on American companies converting their money to Bitcoin. But if Saudi Aramco do it, if Alibaba do it, it gets a bit crazy. So let's have a look here and see the financials. Balance sheet. So total cash 90 billion per quarter. Let's go. Oh, that's annually, yeah. 90 billion cash. So 1% of that is 9 billion. If Apple invested 9 billion into Bitcoin, and if Apple did it, what would happen to the value of Bitcoin? What would happen? Just guess. If any of these juggernauts follow Tesla and put 1% of their cash into Bitcoin, and again, you have to think with Apple, if they lose 1% of it, if they lose 1 billion, is 1 billion going to hurt Apple to lose? I'm going to show you how much it doesn't hurt them, because they've had court fees for more than 1 billion and laughed it off. So here's the accounts payable that I was talking about before. Accounts receivable, how much they're owed from people. So yeah, I hope that gives a bit of an insight. Let's keep going. So what's happening, why the whales are getting more involved, is because people are actually holding Bitcoin for longer than people have ever held it before. What the problem with Bitcoin, why it was moving up and down so much, is people were just buying it and then selling it, buying it and then selling it, buying it and selling it. No one was treating it like an asset and actually holding it. Whereas what's happened is, we can see the blue mark is people have been holding it for 5 years, and there's more and more people holding it for 5 years, increasing its value as it goes along and increasing its lucrativity as an asset. So Bitcoin's market and investor set appear to be maturing. So this is the realized capitalization cost. So what is that? It's the, how do I describe that? It's the Bitcoin's aggregate. How do I explain that? Is it worth it to the investors? So the return on it for them is the pull down getting less and less? Is the drawback getting less and less? And we can see with Bitcoin, it definitely is. It's getting nowhere near its previous lows of 2017, and then the low in 2019 was nowhere near the low of 2017. Then the low of 2020 was nowhere near the low of 2019, if that makes sense. So compared to 2017, again, this is the Bitcoin price and this is the Google searches. So we can see there's a gap between it now, whereas in 2019, it was quite close. And in fact, there was more people searching it than buying it before. So it was very speculative, whereas now the gap is getting bigger, which is good. And then what's happening is with the rise of Bitcoin, it's opening up opportunities for altcoins because it's providing more trust, it's providing more opportunity and more attention for the entire crypto space. So as the value of Bitcoin goes up, the value of all altcoins goes up with it, which is what we're going to talk about in a second. So Bitcoin could play a pivotal role as corporate cash. So what we're going to start seeing is on these sheets where you've got companies putting how much cash they've got, they'll probably start putting their Bitcoin, and they'll probably also start releasing their Bitcoin gains from quarter to quarter and what debts they paid off with the gains that they made. So this is the potential price difference that it makes to Bitcoin if just the S&P 500 companies allocate 1% of their cash to Bitcoin. The price of Bitcoin would automatically increase around £40,000. If they start allocating 10%, then yeah, that's when the price starts hitting 450,000 plus. So preparing for these institutions to get involved, this is what we really want to focus on. Yes, it kind of defeats the object of it being decentralized and whatever, but people are in it to make money on it. So what we're seeing here with the trading volume, which is the most interesting part for me. So everyone always talks about how Forex it's got like $1 trillion a day are exchanged in it. So stocks, so Forex, I think it's got 3 trillion a day traded. That's the volume of currency that's traded every day, whereas stocks is just under 1 trillion. Now we can see with Bitcoin, it's just around 6 billion mark, but it's projected, it's just past square, and probably in 2021, it's going to have more volume traded. It's going to be the highest volume individual asset class than anything. So it'll be doing more, it'll have more people buying and selling it on a daily basis than Apple shares. Then is when it does more volume than the whole US stock market, is when it becomes very interesting. Then when it becomes more than the whole currency market altogether, is when it's got complete domination. So I hope this is making sense and you're getting value from this. So institutional investors can access Bitcoin in sophisticated ways. So because of some of the things that are happening with it, like with the wrapping of Bitcoin, I don't know if you understand what's happened with that. So what's happened is someone's created a smart contract on Ethereum where they've wrapped the data from Bitcoin and created their own coin, which is the wrapped Bitcoin. So instead of owning Bitcoin directly, people can indirectly own Bitcoin and then get futures on it, which means that your futures is what happens with commodities like sugar, oil, coal, cattle, so on and so forth. So it's basically where you're saying, I'm going to get it for this price because in a year's time, it's going to be worth this price and you're paying this price for it. It's very similar to put and call options. And this is what started to happen with Bitcoin. So very interesting. So this is something called a Monte Carlo projection. So a Monte Carlo projection basically simulates 1 million portfolios composed of different asset classes as shown in the chart. The efficient frontier captures the highest returns possible for any given level of volatility. So it's calculated that the average maximum that they've projected that companies are going to be putting into of their cash into Bitcoin will be around 6.55%, and the minimum will be 2.55% in the next 10 years. So yeah, so that 1% allocation, bringing the Bitcoin price to 1 billion, bringing the Bitcoin price to 100,000. We need to be looking at this more, which is the 2.55%, which is what the calculations have worked out will happen. So Bitcoin's price, more or less, is going to get to above 200,000. If the 6.55% happens, and we have a lot of the wealthy people, the hedge funds, in putting their capital into Bitcoin, pension funds being backed by Bitcoin, sovereign wealth funds, so that's like countries using their currency being backed by crypto, by Bitcoin specifically, and insurance companies backing themselves up with 6.5% allocation in Bitcoin, then that would mean the price will get to 500,000. Let's just have a check at what the price is now. 43,000. So it's basically a 10x, and we can see what's happened from just today from Bitcoin, from Tesla announcing. Just an announcement of Tesla doing that has caused the price to increase 13%. Now we've got Tesla, Square, and PayPal that have all done it. So what do you think is going to happen? Are people going to copy? I think yeah. So that's that breakdown there on that. So hope you took some value from that little breakdown of the future of digital money. So what we're going to do is I'm just going to quickly discuss altcoins. So the altcoins that I'm looking at and why. So you might want to grab your pen and paper for this bit. Let me go through my altcoins list. So the first one on my altcoins list is Cardano. Now, the reason Cardano is otherwise known as ADA is because it offers smart contracts. So what I'll do this on CoinMarketCap so we can see them. So Cardano is ranked number 4 of all the cryptocurrencies. When we go in it, we can see it's up 13% today. In the last 7 days, it's actually been up 96%, which is 100% return in 7 days. Come on. So it's currently $0.7 per coin. So what I did is I just chucked in a couple of pounds that was spare. No hints. I am not a financial advisor. I do not intend to be perceived as a financial advisor. All investment comes with risk. If you're unable to mitigate the risk, please contact a financial advisor. I'm working with several financial advisors. If you would like to talk to a financial advisor, please contact me and I can put you in contact with them. Everything that you see on this job, but entertainment purposes only. There we go. Just done my little disclaimer. Anyway, so yeah, do the maths if it's gone up 100%. So one of the things you'd want to do is probably read the white paper, or if you're not that good at reading, then just go on YouTube and find an explanation of the Cardano white paper across multiple platforms. And then again, in terms of research, one of the things we've got to realize with some of these cryptos is some of them don't do what they say. Now, this is what I've just discovered with Ethereum, is that Ethereum doesn't fully do what it says it does on the tin. Just like with Nike, just like with a lot of companies, it's marketing. A lot of companies will say that their product does this to this temperature or to whatever in this condition, but when you actually try it, it doesn't. And this is what I found the feedback to be with Ether, is that when people are operating in these smart contracts on there, it's actually not, it works, but it's a bit slow. So unless there's an update to the entire Ethereum network and they do something to improve it, then that's something that's holding Ethereum back that no one's really talking about. So one of the things when you're doing your research is I'll try and research and find people that are actually using these platforms to create stuff. So you can do that on LinkedIn, just literally just type in that hashtag and you'll find someone talking about it that's building stuff on it, and just get their feedback on it to see if it's actually working well. So yeah, Cardano. Okay, what was we talking about? So Cardano smart contracts. Everything on this is tested and peer reviewed. So it doesn't go out to the public until it's actually been tested and peer reviewed. So what's peer review? It's just basically reviewed by people using the platform already, kind of like beta testing. So that means that new things take longer to come out, unfortunately, on the Cardano network, but it means that they're more sustainable. So it's basically found all the problems with Ethereum and fixed them. So it's just open mining to the public. So previously the public couldn't mine Cardano, but now mining is now open to the public, and it's designed to prevent large holders being the stakers. So one of the things that's happened with Ethereum, again, that no one really talks about, is that I think it's around 70 or 30% of it is being held by one individual. So let me get the facts right on that. Write it down on one of my notes. I'll find it. So yeah, and then with Cardano as well, in March 2021 is the third era of the development stage. So they're going to be releasing new parts of the Cardano blockchain for people to be able to do stuff. And then one of the things that happens with it is the next bit is Marlow, which is due to come out 2022. And this is for financial contracts and for non-programmers to be able to build applications within Cardano. And Cardano also has an internal voting system where people can vote on if they want things to happen with it or don't want things to happen with it. So just so for any newbies that don't understand what blockchain is, let's just quickly break down what blockchain really is. So blockchain is basically the new internet. That's the best way of thinking of it. But think of it as internet 3.0. So the internet is actually, you know what? So computing works like this. So computing is all done on this. If you know what MS-DOS is, run DOS run. So this stuff. This is computing. This here is computing. But then what happened is they built a layer on top of it, which was the visual layer, which came Microsoft, which is the operating system, is what's happening behind it. But then you have the visuals over the top of it. So the visuals are literally like this here. Everything that you do is being done underneath it is a code running underneath it like this. Now, then you have the visual layer. Now, on top of the visual layer, they built the internet. And the internet, on top of the internet, they've built the blockchain layer. And they need the blockchain layer to be able to build things like the Internet of Things and wireless communication and quick transfers of data and information and so on and so forth. So blockchain, in a way, best way to think of the blockchain is like if you ever use Pirate Bay or LimeWire or anything like that, that is blockchain technology pretty much. It's where something is split across multiple computers and then yeah, it's just split across multiple computers. That's the best way of explaining it for safer and for speed. Cool. So that's the idiot's guide to blockchain. Even though none of you guys are idiots, you'll probably know more about blockchain than me. So next one that I'm looking at is XLM. Well, not looking at anymore. I have to declare it because I'm putting it on YouTube. I'm actually investing in Cardano and XLM. So let's go to XLM, otherwise known as Stellar, otherwise known as Lumens. So Stellar XLM is the rank number 12 in total of all the coins. The chart hasn't come up on here though, don't know why. Okay, cool. So info about that. So it's actually a European backed currency. So lumens is what the coin is called. It allows you to tokenize assets. So it allows you to take other assets that you have and turn them into a token to be transferred. So it's great for receiving money. And its whole purpose, why it was created, was actually to transfer money. So fiat, they call it. So cash that's not backed by anything. So basically dollars and pounds is what it was created to transfer. So it's very similar to Ripple. So Ripple is a one that people have heard of more. But the key difference with this is the co-founder of Ripple is now the co-founder of Stellar. So yeah, dig your teeth into that one. And I'm sure something similar to that happened with Cardano, but do your own research. So Stellar is mainly designed for the people and not for the institutions. That was the whole concept of it, is for money transfer internationally for the people, not for institutions. But obviously the institutions are going to get involved like they do with everything. So it's cheaper and faster than Ethereum. And it's actually had a 104% increase year on year on transactions. So again, we can see it's nowhere near its highest high. The yellow is Bitcoin, and then the green is the growth that Stellar has done. So we can see at the moment it's outpacing Bitcoin in terms of returns, but again, we can see it's got a long way to go before it gets anywhere near its high that it had in 2018. So very, very impressive there on that one. Also, it has had over 1 billion transactions, and it's also used as the Ukraine's national digital currency, and it's made by IBM. So that's why that one's on my list. Okay, next one that I'm invested in is Polkadot. So for me, this one I think has the most use case potential. Again, highly recommend going on YouTube and just going on. I've created a playlist, which I'll put in the chat now so people can watch it after. It's in the Facebook group, but I'll pop it here because I know not everybody's in the Facebook group. In fact, what I'll do is I'll pop a link to the Facebook group. And then I'll pop a link to the Ting. Ting being the YouTube playlist, which explains all of these altcoins in more detail from people that know about them a lot more than me. I'm just I'm there with the torch going, shh. You should have a look at these. Copy link. Can't believe Fadlan's not here. This was his element. Why is this not pasting? There we go. So that's the group. And then let me paste the post. Where is it? 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 Let's do my research. No way did I not post it. Oh, wow. I'm a pagan. I didn't share. Okay, so what a pagan.
The way Leeds play anyway is man for match. But yeah, they pretty much in control. I think they need to be a little bit more.
Yeah, if I can just get you to mute your mic for us. Thank you, thank you.
And nearly on another day, they scored another 1 or 2 goals.
Namaste.
Yeah, that's his Premier goal. Yeah, and again, Crystal Palace on the end of it, you go back to the Newcastle game as well, something similar. But again, we sort of go. This is similar. I think Chris Coleman's Chris. Nice Chris highlighted before.
David, there we go. Okay, where the hell is the share link gone now? Oh, here we go. Gold. Boom. Okay, so that's the YouTube playlist. So what I'm actually doing today is, because of the value that I'm sharing, I'm actually want to receive a payment from people, not directly to me, but for a well that I'm trying to build in Ghana. So any contributions would be much, much appreciated. Really, really appreciate it. I'm going to post the link to that at the end of the show. I'll put the link there. I'd really appreciate any donations to help me build this water well that I've been trying to build for a year in Ghana. Would be much, much appreciated. Let me show you. Water well that I'm trying to raise the funds for. I was doing it by doing a 10K run every week, but lockdown and injuries have kind of slowed that down. So let me get that link. See, most people are asking for money for them, but yo, I'm like, yo, the world's a peak place. I got water, not everyone has got water. So again, any donations that you can make, I would really, really, really appreciate, because I'm only 38% of the way there, and that's what, yeah, would appreciate that, guys. Okay, so back to the value. Okay, so we've done Stellar. Polkadot was the next one we was doing. Okay, so Polkadot is the, what rank coin is it? Is rank number 5, it's 5th ranked coin. Again, it's doing crazy things. We'll wait for the chart to come up. So the price change in the last 24 hours, 16%. How's it done over all time? If we just look at the last year and compare it. So again, it's really matching Bitcoin. At the moment, it's outperforming Bitcoin at this moment in time. Quite a bit, actually, when you look at it. So something to take notice of. How much has it done in the last year? It doesn't show the last year. Okay, cool. So facts about Polkadot. So Polkadot is mainly designed for startups and for enterprises to be able to use the blockchain. So their whole angle is that they're trying to approach companies like Nike, like Amazon, like whoever, to be able to move their stuff to the blockchain. So say, for example, Nike and all their warehouses and all their auto and Amazon with all their automation, with all their robots that they've got in the warehouses, they've got a lot of data that they need kind of AI and they need help with it. So moving it to the blockchain would be very efficient for them. So that's why this one really caught my eye, is the people that they can potentially work with is much more open, is a lot more easier to use and a lot more visually friendly when you look at the stuff that their content from their official website, in comparison to every other thing that I'd seen. I just felt, yeah, this looks like it'd be easy for even my mom to use Polkadot. So yeah, it's a really simple, nice together platform. I quite liked it. That's their website. So currently it's $22 a coin. It's very scalable and upgradable. So it's got customizable blockchain. So the blockchains. Oh yeah. So basically what this one has is it has the blockchain So I don't know if you can see my hands. So imagine the blockchain like this, and then it has a relay wheel inside of it. So like a bike wheel. So imagine like a bike wheel with their blockchain. So it allows different parts. You can build on different parts of the blockchain and then have your part of the blockchain connected to a different part of the blockchain. So say, for example, one part of the blockchain in Polkadot becomes really heavy on finance, and then another part of it becomes really heavy on sport. You could connect your part of the blockchain to that part of the blockchain and use the information and the data that's going on in this sports bit if a given provider wants you to do that. So say, for example, Apple and Nike, they do stuff together. You'd be able to connect the Apple part of the blockchain to the Nike part of the blockchain. And for things like the Internet of Things, like health stuff and stuff like that, it would be amazing. So I think the applications for that for the future are crazy. And again, it allows for voting. And the most important one that really caught my eye with Polkadot is it allows you to bridge to other blockchains. So you can actually connect Polkadot to the Ethereum network. You could actually connect the Polkadot blockchain to the Bitcoin blockchain, which for me is just crazy. So for me, I saw a lot of usage potential in that. Yeah, saw a lot of good feedback on that one. So next one is Tezos. Obviously, I'm not discussing Bitcoin because we've already done a massive lecture on Bitcoin. Ethereum, you've already heard me talk about that one before. So Tezos at the moment is ranked number 25. So Tezos is more a smart contract designed for safety. So it's all about safety with this one. It's all about financial safety with this one. And we can see how well this is done in comparison to Bitcoin at this moment in time. Its growth is making Bitcoin look shocking on its growth there of all time. But when we go to the last year, it might change it a little bit. So yeah, again, it's just got crazy growth at the moment. Let's just go linear on here. So a bit more about Tezos. It's because of its safety. A lot of government contracts are going to start using it just because of the safety. So for things like transport, nuclear, and aerospace, it's a massive, massive space. And also, it's not actually mined, which I thought was very interesting. The coins are actually rewarded as part of the proof of stake mechanism. So basically, if you are acting as a verification for someone within their blockchain, that's how you're rewarded for more Tezos coin. So this is how I think and why I think it's going to be used by governments, because it just makes sense to have it as like a government verification system using the Tezos blockchain. So again, it also is very similar to shareholders in terms of the coin holders have voting, and it's used for safety on other blockchains. So a lot of developers that use Ethereum or that use Polkadot tend to use Tezos for the safety part of their blockchain. So if you're transferring art or something like that, which has just started happening, digital art on blockchain, then yeah. So next one is Celsius. Celsius. So why Celsius? For me, this one was the most, it does something very similar to YFDAI, which we're going to come up to in a sec, but I just felt it was more commercially viable again. So this is $5.10 a coin. So basically Celsius's whole concept is to be able to allow people to take out loans against crypto. So imagine being able to go, instead of going to the bank to get a loan, you just get a loan in coin and they hold your current coins until you pay them back in their coin. So obviously if the value of Bitcoin goes up whilst they're holding your Bitcoin while you're getting out a loan, then they're making bank, which makes total sense because people always need loans, always. So I just thought that was a very ingenious crypto. So when we look at this in terms of its growth, incredible growth, not doing as well as Bitcoin, but still great growth nonetheless. Cool. So Celsius, yeah, it's loans for people, and you can get 5% interest on your crypto. Get loans on crypto backed by your money or backed by your crypto, and your money is used as your crypto is used for other people. So they loan your crypto to other people, so that they can convert it to cash and then they pay back. So then the one that model is based off is YFDAI. Hey, there's BitTorrent. Oh, I used to love BitTorrent. No, I didn't. I didn't download anything illegally. Why would I love BitTorrent? Why would I even know what Pirate Bay is? I don't know what it is. I've just seen it. And Aries and LimeWire and BearShare. Anyway, so YFDAI is ranked 545, but you can see the price of the coin, $4,467. So let's compare this. So again, incredible growth on this. In the last 24 hours, it's had a 3% gain. And what we want to really understand here is they are all about innovation. They are like ARK Invest, but of the crypto space. So what is it that they're trying to do in the crypto space? Is they're trying to allow for staking, farming, safe swapping, insurance, lending, borrowing, and a launch pad to launch your own crypto designs and blockchain designs on. So you can actually earn 2%, 0.2 a day, 6% a month, and 72% interest for a year. So blowing your bank's rates out of the water. And that's if you hold for 3 years. If you hold your money there for 3 years, that's the guaranteed rates that they're giving you. Or you can just store your money with them. And you've got different reward rates that they offer out for staking your coins with them for 30 days, 60 days, 90 days, and 120 days. And the main thing why I invested in this one is YFDAI are planning to go into the e-commerce space. So they're going to be a blockchain e-commerce. So we already know how e-commerce is doing. So yeah, that's why I was interested in that. So they're also a part of CEPA, which is the Crypto Investors Protection Alliance, which I hadn't heard of until I started researching these guys. So very interesting. And these guys have the largest residual income opportunity available because of the amount of stuff that they do. So they're basically like a weird network marketing company of cryptocurrency, the amount of stuff that they're going to be allowing people to do off their coin. So yeah, I found that one very interesting. That's why I got in that one. It's a little bit more of a technical one to understand though, that one. One that I'm in at the moment, obviously, is crypto.com. Now, the reason I use this one is because I was also using Pluton, which we'll come to in a sec. But I use this one because it was just really simple to use. This is the platform that I use to get all my tokens, all my altcoins. So my main coins I hold on Binance and what's it called? Coinbase. I'm getting a tutorial on Coinbase Pro tomorrow. And then my altcoins I hold on crypto.com because you can get a card. So you get a bank card which is sent to you, and you've got to stake coins on crypto.com. So these are different cards that you get, and then with these different cards you've got to stake a different amount in each one of them. So what is staking? Staking just basically means you're going to hold your money in there for a certain amount of time. And you also get a cashback with this. So I thought that was the main bit that really intrigued me. So you get different cashback rates on the different cards, and you get the different cards by staking different amounts. So I like this one so much that I'm actually going to be getting my mom to get her crypto through this, just because I think she can understand it, and it's a fairly simple platform to use. And then one of the other things is some of the partners that they're in partnership with, like you get free Spotify, free Netflix, free Amazon Prime, free Expedia, 10% off Airbnb and lounge access and so on and so forth if you're staking a certain amount. So that's if you're staking 5 million Crow. We started off with this one here, complete transparency. So 5,000 Crow we staked, which is, I think it's about £250. And that gives us 2% cash back on anything that we use the card on back in Crow. So if the value of Crow goes up, the cash back that we're getting back goes up. And it gives us on Spotify for free. And then we're going to just continually compound invest every single month into it until we get into this card, and then until we get into this card. And that's the way that we're going to do it. So that makes sense there. And on this one, I've actually got a referral code on this one. So if you want to get this one to get your cryptos with, or with Coinbase, let me know. I'm going to put that on my Facebook. But can you do me a favor while I'm doing this? Can you put my Coinbase referral and my crypto.com referral in my Facebook group? Just cut and paste it from there and then just put it in my Facebook group. I've changed the name to Time Well Invested. Okay, cool. So back to the different coins. So where are we at? So that's Crow covered, YFI covered, Celsius covered, Plutus. So Plutus. Now, aesthetically, Plutus was the one. Plutus, I wanted to use more than Crow. But I'm not going to lie to you. You know, I was just talking about are they actually as good when you come to use them as they say they are? Yo, this thing was a nightmare. It is too secure. So Pluton, is that the name of the coin? Yeah. So the name of the coin is Pluton. Is $8.99 per coin. But oh my days, because you got this two-step verification, it was so hard to log in and actually even buy my coin. It was the craziest security I've ever seen in my life. So you had to like log in with a separate app that you had to verify on, and then use the password generated from that in the app that you were using. You deleted it. Which one? Well, you need to find it. I've sent it to you in a message. She had one job and she deleted it. Did you just press cut or backspace?
One of them.
Well, you can just paste it if you press cut. So yeah, you can see, look, this is visually really, really, really nice. As you can see, you can open a free Plutus account. Really, really nice to look at. And I would have got this card, which I would have had to pay $9.99 for. But it gives you, the difference between this and Crow is it gives you a UK sort code and account number and an IBAN number, which could be used for business. So yeah, that was interesting to me. And it gives you 3% cash back on anything you're using back in Plutons, and it's only available in the UK and Europe at this moment in time. So again, got a lot of potential to grow because it's not even touched foreign markets yet. So this is the high that it was at, and this is where it's at now. So again, a lot of potential there on that one. And then Chainlink. So we've got two more. So Chainlink for me. So Chainlink is, I think it's rated as the highest growing crypto. And the reason for that, so Chainlink grew by 500% in 2019. When we look at this compared to Bitcoin, should show us. And it's how much a coin? $25 a coin. And we can see there the gains that it's had versus Bitcoin. Crazy gains. So why Chainlink? So 500% return since 2019, and it's an Oracle blockchain. So what does an Oracle blockchain mean? An Oracle blockchain, and it's also ranked number 10 Oracle blockchain is basically a blockchain where it can, how do I describe this now? I don't even need you to do that, babe. I can get it myself. I'll get it off Facebook Messenger because you're taking forever. Oracle blockchain is basically where it can take real world data. So it can take real world data like the weather, or like data from a football match, or data from other blockchains, and insert it into its blockchain. So Chainlink is like the bridge between the real world and stuff and the internet and blockchain. So blockchain, this would be really well used with Polkadot. So you use Chainlink to get the information from, so let's say, for example, if you were doing something on the blockchain and you're creating a gambling website about how many times a player kicked the ball with their left foot, and you got that data from the real world, connected it through Chainlink into the Polkadot blockchain, and then you transfer the money with the security of Tezos through gambling. That is the exact way that Chainlink would work. So it's really good for that. It's going to be going into retail and weather. It's already started doing something with a insurance company to provide information on weather for the blockchain. And anyone can link and have a node. And staking hasn't even started with it yet. So this is where I think this is going to be interesting, because staking gets people to hold it, which increases the value of it. So very, very interesting one. That one. Next is Bird Money, Travala, and PokerStarter. So we'll just quickly go over these. So PokerStarter is an interesting one. Got to do a bit more research on it. So these next three I haven't actually invested in. So PokerStarter basically is like venture capital for new cryptos that are about to come on the market, or new blockchain devices. So it's basically your opportunity to invest in cryptocurrencies before, or invest in blockchains before they become something. So it's pretty cool, and it's all done on the Polkadot network. So as this grows, obviously the Polkadot network grows. So yeah, if you're looking for new things, this is a good place to be. So there was one, this is one that I would have loved to have done. So Exceed Me. So this is a cryptocurrency that's been created on the Polkadot network about gaming, so that you could have invested in with the PokerStarter coins. So basically what it would have meant is you would have been able to play FIFA against someone and bet them that you would score, or you would beat them in that game, and then they pay you crypto coins. That's genius. Imagine that for things like Tekken or Street Fighter. I think Exceed Me, watch out for this. Then Bird Money is the exact same thing as Celsius, but the difference with Bird Money and Celsius and YFDAI is that there's the limits on how much you can loan are totally different. So I've got to do a bit more research into this one. So basically, the more crypto you hold, the more money you can loan, which makes sense instead of it being limited. So it's $122 at the moment. So I think that has got a lot of potential. It's had a massive spike up, but it's just not grown yet. So I think that's got a lot of potential to grow. Then last but not least is one that is on my watch list for future, is Travala. Now, again, a bit like all these travel network marketing companies, it's just not good yet until travel really opens up. You could maybe get in now before travel opens up, but I just decided not to. Even though it's $1.82 a coin, maybe if someone throws me some money and I just find 50 quid or 100 quid or whatever, then maybe I might get this. If I just come into some money soon, then I might get Travala. So basically, it's a cryptocurrency based on traveling, basically. It's got a great real world usage, one of the best real world usages that you can't deny that it exists if you are able to actually book a hotel with it. So you can book hotel, trips, flights, and activities with this. So I think if Airbnb get even a sniff of this, wow, imagine you can incorporate this crypto with Airbnb. It is a wrap. So I found this very, very, very interesting, and lots of good reviews. So this is one that I can pretty much say I'm definitely going to get into, but it's just when. I'm just, again, you can see it's killing Bitcoin on growth, but it's just at the moment I'm just too diversified at the moment. So yeah, that is pretty much almost everything. Let me just make sure that that is everything. Oh, wrong one. Oh yeah, can't finish it there. Oh, people that left, they have missed the trick. So this investing game is a long-term game. So this is my mentor's results, right? This is what you gotta understand. So in 3 months, despite he didn't get in GameStop, didn't get in anything like that, he's up 238% in 3 months. Now, in the last year, in the last 6 months, he's up 23,000%. And overall, he was up 3,000 and odd percent. And that's not even crypto. That is just stocks. So in terms of the potential that is available for you, if you stay consistent, if you do the reading, you do the learning, is incredible. So I highly, highly, highly recommend everybody to just stick with it. Perseverance is the way. And yeah, because it pays. He's been doing it 15 years and now gets a 2,000% return in whatever time. So is it worth it? I think so. So I'm just going to put my Crow referral link there. Anybody wants to use it and sign up to crypto.com, let me know. Or if you've, yeah, pretty much. Cool. So I'm going to open up the call for any questions. Hold up. Allow participants to unmute themselves. Yes. Cool. Any questions on anything? Oh, I forgot to get screenshots again. I keep forgetting to do this. Oh, hold on a minute. Oh. Let's just go to this bit here. Okay, anybody got any questions for me? Oh. No questions? Really? Nobody's got no questions on any of those altcoins, on anything to do with the blockchain, on anything to do where I got this article from ARK Invest. No? I've got a question. Where did I put my phone? That is the main question I've got. Ah, oh, damn. Well, you said it weren't there. Oh, when your girlfriend just is obsessed with Zelda. So guys, I'm just going to take a quick picture. Okay, cool. Thank you very much, guys. If you've got no questions, or if you did and you can't unmute yourself, let's ask Josh to unmute because he's always got something to say. Unmute. Have I muted everybody? Okay, stop the share. No, nothing from nobody. Oh, I'm upset.
I got so what's other than Bitcoin and Ethereum, what coin do you have the most hope in? For not even for for the long term. Well, yeah, for the long term, but in terms in investing your money just so you can get an X on it.
Chainlink and Polkadot, just because they're the most logical. They're like the most practical. They're the most simple. They've got the best use cases, and their user interface for brand new beginners that don't really understand crypto's currency is just really nice and easy and simple to use. Just Polkadot's whole bridge system where they can link in with other people's blockchain just means people are going to use them. And I think them being able to do that, and their whole concept is around connecting with other.
Yeah, makes sense. Yeah.
They can connect and ride off the back of everybody. Like they can just piggyback every blockchain, and then they can get big, well-known brands like Amazon, like Nike, and get them to piggyback off the back of other things, which I just like. I like piggybacking off the whales, and I just see what they're doing is they're just piggybacking off the whole crypto space, which is very cheeky, but very, very smart. And it's like, I can't see how that can go wrong.
So are you long term in that, or are you just trying to get your money and move it to Bitcoin?
No. I'm long in that.
Oh, you're long in that.
I'm long in that. That and Chainlink, I'm long in, definitely. Like, I think those two, like, really understand it. If you read that Big Ideas article from ARC, and you just really understand the world that is coming, whether it comes to electric vehicles, whether it comes to gaming, whether it comes to AI, whether it comes to medical research, Polkadot fits and Chainlink fit in with all of them. Every page that I'm reading about the future and what's coming, they can fit in. Whereas some of the others, like Tezos and like Bitcoin and what's another one, and XLM, they don't really fit in with everything, whereas as they do, and that's why I'm super bullish on that one. But great question, thank you.
No, thank you, sir. Thank you.
No worries, bro. Always love. Anyone else?
I got a quick question.
Yes, man, like Josh, bro, in the building. Hit me up, broski. I'm blessed, bro. I'm blessed. Is your first one with me in it?
Yeah, it's my first one. I'm looking a bit scruffy today.
That's cool, bro. Bro, man said he's looking scruffy today, you know, and he's got the beard looking sharp and fresh. This guy, don't believe it.
Just the oils, man. You know how it is.
Talk to me, bro. Talk to me. What's your question?
My question is, I've just been thinking about like cryptos and everything and how they're moving. And I know this goes like a little bit rightish, but like I'm looking like long-term future. I don't know if you know about cyberpunk. Yeah, and how you got like super corps and stuff like that, and obviously how they're more dominant than like these world governments and so on. So in the same scenario, would you say that the coins that, because Apple, Tesla, all these companies, they're probably going to become super corps regardless, just with the money that they've got.
What do you mean probably going to become? They already are.
Yeah, you know what I mean though, like to that level, like they're gonna be able to they've got power of countries now. So is it going to be a case where like Apple will come out with a currency, or they start to use a currency and eventually that's more powerful than the UK pound or than the US dollar, where
100%. The 100% what's going to happen. Basically, we're going to go through, it's going to be the exact same thing as what happened in 2000 with .com boom. In about 5 years time, there's going to be a massive boom, then massive crypto crash and blockchain crash. And then after that, everything's going to stabilize and only go up. And this is just because, just like with, if you talk to your parents about the .com boom, there was literally people just getting domain names and building websites for everything. And loads of them didn't actually do what they said. The same thing is going to happen because this is just internet 3.0. So you're going to have Abdul's kebab shops, blockchain and crypto coin. And every time you buy a kebab, you'll get a coin. There's just going to be them for everything, but a lot of them are going to be created, but a lot of them are going to be built off the back of other people's blockchain. So this is where I'm seeing Polkadot and Chainlink as the two that people are going to really build on. People are going to build on the Ethereum network, but I think more so Polkadot. I think Polkadot's got potential to outdo Ethereum. Don't shoot me. But yeah.
Okay, cool. I just wanted to hear that sort of perspective, but if that's where we're going, it just allows me to think differently.
Yeah, just think of it as the internet 3.0. That's literally blockchain. That's all it is. It's just the internet being able to be better, faster, safer, more secure, and being as everything's about to go into again, once you read that Big Ideas article from ARK Invest and you realize how virtual the world is about to get, the virtual worlds that are going to be created, like people are going to be owning virtual real estate. That's what's going to happen. And it's going to be, how do you secure that without the blockchain? How do you transfer your island that you live in online, or your office building that you work in online, to somebody? How do you transfer art that's created online securely? So that's where it is. You just got to look at what's happening with gaming already. Like, people are paying crazy amounts for skins for characters on Call of Duty and Fortnite. And that's just the beginning. That's just gaming. It's going to transfer to the corporate world as well.
Okay, cool. And that probably ties in with Neuralink as well.
Yeah, 100% ties in with Neuralink.
Okay, cool. Thank you. I appreciate it.
No worries. Good question. Anyone else? Last question.
Hey, Mike, it's Paul. Can you hear me?
Hey, Paul. How you doing, bro?
I'm good. Thanks for today. That's really, I just can't believe there's so many different types of coins and things out there. So it's pretty incredible. So if I was to buy some of these, Chainlink, Polkadot, is it crypto.com?
Yeah.
It's where you can buy.
So I buy mine on crypto.com, but you can actually buy them on, there's multiple platforms. So one of the things I've been recommended to do and again, this isn't financial advice, just in case the platforms go down, like what happened with Ripple, to diversify the platforms that you're using to buy them on. So the platforms I personally buy on are my main ones, like Bitcoin, Ethereum, Ripple, I get on Revolut, Binance, Coinbase. Then my altcoins I get on Binance, Coinbase, and Crow. Yeah, which is crypto.com.
Okay. All right. Okay, cool.
So
that's good to know. Appreciate that.
No worries. So yeah, I definitely recommend that to other people as well. You don't really want to be stuck in a situation whereby something happens to one of the platforms and it's got all your coins in it, and then boom, or they do a forced sell or something like that. That's peak. You don't want that. Yeah. Diversify.
Yeah, I know IG was kind of freezing a few weeks ago during kind of a shorting period for me, and it was out for about 2 hours for 3 days, and it was a nightmare.
Yeah, exactly. So we don't want that happening. As your coins grow in value, that's a nightmare. Imagine. Oh, nah, that's crazy. We've just been joined by Jay Campbell. Is that Javon? Have I heard of GRT? GRT I've not heard of. Give us the lowdown. Give the people the info, bro. Come on, bro. You gotta share that sauce, bro. Come on, if you got the secret sauce and we're all using ketchup, come on. Or was that a private one? You're gonna discuss it with me first.
I think that's the draft. I think that's on Coinbase.
Is that on Coinbase?
On Coinbase. And I think you can even get that for free. I think that's one of the ones that I got for free. You know, you can watch videos and you can get some of them for free.
I heard about this and I was like, are you kidding me? You literally watch.
I mean, you only get like £2, but listen, that's like free graph coin. So if that hits one day, as much as the Bitcoin,
they literally give you free coins just for watching a video.
Yeah, adverts. And then you got to like answer a little question. But more time, if you get the question wrong, it just says go back. So you don't even have to watch the video. You can. It's crazy.
That's mad. Okay, I'm going to do that tomorrow then. I didn't, because I saw it and I was like, what they're gonna really give me. But I understand the compound effect. Like £5 is not £5 when you start adding it up into what it can grow into. £5. If you get £5 worth of free coins and you shift that into the right coin at the right time, that's 5Gs.
No cap.
That's 5Gs, bro. So yo, I'm gonna get me them free coins, bro. So that's Coinbase, yeah?
Yeah, brother. Yeah.
All on it, bro. All on it. Okay, cool. Because I'm loving these. Oh, the graph. Yeah, he said it was the graph. Okay. Let me do some little research on this. Okay, cool. Let me load that up for after the call. All right, cool, guys. Bless. Power to the Most High. Power to from the Most High to all of you. Thank you for all tuning in, giving me your time, your attention, and allowing me to spill this knowledge. Thank you very much, everyone that's tuned in, especially those that have decided to come on and ask questions. Please, again, same thing next week. Really appreciate it if you tell a friend, because, yo, people need to know this knowledge, man. People need to know, because, like I said, I got my mom on this, because I'm not serious about it. My mom's a stock investor now. My mom is in the crypto game now. Although she's been giving it me because apparently she told me about Bitcoin 4 years ago, apparently. But, you know, okay, mom. But it is what it is. But yeah, man, love to you all. Thank you. Thank you very much. See you later.
Cheers, mate.
Thanks, mate.
Peace.
Thanks, Mike.
Well, thanks.